Let's welcome in one more corporate. Reliance Nippon AMC reported a strong set of numbers in the first quarter for the year on the back of lower cost and the pass-through of fee cuts as well. Remember, the Nippon Life stake purchase, which is expected to complete by this month, will also add some bit of multiple favors to this company, P multiple favors to this company likely. So talk about all of this and more, and the story that they are trying to convey to the investors at the MK Confluence Investors Conference. We joined by Prateek Jain, the CFO of Reliance Nippon Life Asset Management. Prateek, good having you. Thanks much for joining in. This is Neeraj here. Good afternoon. What's the response been from investors who are meeting you today? What is it that they are trying to gauge, and how confident they are of the growth story within the Indian mutual funds lasting for the near future?
So investors are pretty excited about to get introduced to the newer version of Reliance Mutual Fund or Reliance Nippon Asset Life Management Company after this open offer. And obviously we had a slightly difficult last 1 year or so, and importantly now with these things behind us, they are very optimistic that Reliance will be able to gauge and regain his lost glory.
Okay, interesting.
In terms of the mutual fund industry.
No, please carry on.
Sorry. Yeah, in terms of the industry, what we see is that industry in last 5 years has grown 3 times, and I don't see any reason that in the next 5 years will grow another 3 times than from what we are. And I think importantly, this SIP juggernaut which has started, which is about 10,000 crore for the industry coming in every month, I think that has sustained despite this volatile market. And I think this will further gain momentum once the market stabilizes, and we'll see a lot of money coming through these SIPs. Most of the investors which are coming in these SIPs are new investors, and they are starting small. And then obviously we see that with only 2% of the population investing into India so far, I think there is a huge growth potential which lies ahead of us.
Okay, Prateek, if I can try and correlate this to what's happening to individual AMC's quarterly performances or annual performances. Now, if I look at Q1, which is the most recent number set that you've come out with, the top line growth there was a bit of a degrowth on the top line. However, you likely tightened your belts, and therefore the bottom line numbers looked okay. Is it purely cost containment, or how much of this is also the effect of passing through of the TERs?
Yeah, so it's a combination of all three. What has happened is there is a compression due to the regulatory intervention by reducing of the TER. The second part was that upfront commission has been banned, and the third is that all expenses have to be now charged to the all the scheme expenses related has to be charged to the scheme. Now these 3 factors have contributed to the lowering of the top line. However, as most of the AMCs have passed on the TR cut to the distributor, and therefore we have been able to retain our margins. And more importantly, at Reliance Nippon Life Asset Management, we have been able to also cut down on some of our discretionary costs, as we have mentioned in the past, and have brought in about some operating efficiencies, and therefore our bottom line has shown healthy growth despite the lower AUM as well as despite the lower top line.
What's the current proportion, the latest one that you can share with us, of equity versus debt? Because I do believe that on the debt side and the liquid fund side, you've lost a bit of market share, maybe 300 to 350 basis points if I'm not wrong. Now, what happens? How do you plan to arrest that fall, and how do you see the equity side of the business shaping up?
So if you see in last 1 year or so, we have lost a good amount of fixed income or debt assets. That was more to do with because of the industry issues, post ILFS. Also that we face some headwinds due to our group related issues. But I think most of these assets can be regained quite quickly. We are quite hopeful that we will able to at least regain what we have lost in the last 2 or 3 quarters. In terms of the retail, our retail equity growth have remained quite good, and we see that we'll be able to capitalize further post this change of name.
Okay, yeah, I was coming to that, but just before that, what's the current ratio between equity and debt, and how do you see that shaping up over the course of the next 12 to 18 months?
Yeah, so our equity assets have grown. They are now constitute about 40% of our total assets, and this is how we would like to see that going forward, while we continue to focus on every opportunity, whether it is equity, whether it is fixed income or ETF. But what we would like to see is that our equity assets remain in excess of 35 to 40% of our total assets.
Okay. The other bit is, I just, the point that you mentioned, now that this stake purchase will be completed soon, how does it benefit the listed entity? One is, of course, the perception, and admit it or not, but maybe the multiples and the whole perception towards the newer entity would improve. But two, the leveraging of Nippon's global presence and the network. Any inkling that you can give us on how would the new renamed, rechristened new entity essentially take that forward?
See, typically we don't comment on the valuation and the share price, but
Sure.
What I can tell you is that fundamentally the business remains strong. Despite the toughest quarter where we have seen decline in the AUM, we have been able to report almost 13% growth in the operating profit. So we remain committed to a profitable growth. And when it comes to Nippon, Nippon is a 130-year-old company, a Fortune 500 company, which is managing more than $700 billion in assets. And we believe that the kind of practices and the global connection which they will bring into us, which will help us to grow further in the overseas locations.
Okay, one last question. I mean, how do you foresee the top line numbers or the revenue growth run rate to be like, not just in the next 9 months, because it's still probably a period of transition, but over the course of the next 2 or 3 years? What's the CAGR run rate that you roughly anticipate? Would you be able to match what you've done in the preceding 5, 7, 10 years, as the case may be?
No, so basically what I've said in earlier part of the interview, that in last 5 years the industry has grown 3 times, and I don't see any reason where we can do that again. And in terms of Reliance also, barring that last 1 year, we have been growing almost at the pace of the industry or slightly faster. And I think we will be able to first regain the lost assets and then probably able to grow faster than the industry. That's what we expect to do in the near future.
We wish you all the best for that, Prateek. Have a great conference and all the best in the new avatar that you guys will be in very soon. Thanks so much for speaking to us at Bloomberg Quint.
Thanks, Neeraj. Thank you so much.